Hi there, welcome to Kneppy Invest and welcome to another financial year 23 result video. I'm going to feature Sonic Healthcare in today's edition. This is a company that I probably would consider to be very close to being a high quality company, particularly if you look at the chart and the financial performance of this company up until around about 2020, 2021. You definitely see the indications of a high quality company, or I suppose the word is characteristics of a high quality company. However, over the past few years, because this company really benefited from COVID-19, because this is a pathology company, among many other things they do, this company really benefited from COVID testing. And those benefits have dwindled away over the past few years. So if you do look at the financial state of this company, you might think this company is in free fall. But that's an illusion. And I think maybe the market is overreacting slightly right now. So possibly an opportunity to buy into this high quality company or borderline high quality company at pretty good value. Now, I probably should mention what this company does. I've already sort of given it away. This is a healthcare providing company with specialist operations in laboratory medicine, pathology, radiology, general practice medicine, and corporate medical services. They employ about 1,600 pathologists and radiologists and more than 15,500 medical scientists, radiographers, sonographers, technicians, and nurses. I'm pretty sure they have operations all around the world. I'm pretty sure that is a memory I have. That could be completely wrong, but I'm pretty sure I saw this company get into Germany or somewhere like that. So I'm pretty sure this is a global company. Now let's have a look at the financial year 23 results for this company. And you'll notice that revenue and profit are down big from financial year 22. And that's to be expected because this company really benefited again from COVID-19. So some of these numbers, the revenue and profit is going to drop. And the profit should drop by a fair bit, because the company experienced pretty high margins when they did COVID testing. So revenue down 13% to 8.2 billion, profit down 53% to 685 million. Gross margins fell, and you'll see when I show you a slide later that gross margins have been falling the last few years, down to 34.8%. Operating cash flow positive, 1.5 billion. Free cash flow positive, 1.1 billion. And the company does have debt, a net debt of 886 million, but that's okay because this is a big company and they'll be able to, I was going to say solve that debt, but they'll be able to service that debt without any problems, most likely. Sonic Healthcare has 478 million shares on issue and a share price of about $28. The market cap of this company is 13.4 billion. Funny enough, I actually haven't had a look at what the share price is lately. So let's have a look at the share price right now of ASX. Just put the ticker code in, $28.54. So the market cap will be a little bit higher than that, but not by a lot. Maybe 13.6 billion or something like that. Company has $7.9 billion of equity, which means based off their financial year 23 results, company only has a return on equity of 8.7 and a return on invested capital of 6.5. Now, I would prefer those numbers to be greater than 10. So one of the ways I determine whether a company is high quality or low quality, apart from looking at revenue growth, earnings per share growth, and that sort of thing, is I focus on return on equity and return on invested capital. And I want those two to be greater than 10. But I might give Sonic Healthcare a bit of a pass here just because they have come off the tailwinds of COVID-19, and I think the company has been negatively affected by those decrease in those tailwinds and more headwinds. And I fully expect return on equity and return on invested capital to get higher than 10 over the next few years. And dividend yield of 3.7%. More than likely, if you're a shareholder of this company, you wouldn't be disappointed in that sort of dividend yield because you probably expect over the next 5 or 10 years, this company would grow and would be a bigger company, and the capital growth you get would be quite good, maybe 5 to 10% per year. And if you add the dividend yield on top of that capital growth, you'll probably be happy with those sort of returns. Now let's have a look at the financial history of Sonic Healthcare. I'm going to focus on revenue, gross margins, and net income in this particular slide, looking at half-year increments going all the way back to 2015. And between 2015 and 2021, we saw really good growth in revenue, particularly during 2020 and 2021, hit COVID-19. But even before that, this company was experiencing good growth in revenue. Revenue grew from 2.5 billion up to 3.5 billion. So that's exactly what I'm looking for in a high quality company. Gross margins remaining stable, but there was a hint that gross margins were dropping a little bit. Fell from 33.5% in 2015 down to 32.4%. So that would have been a slight concern I would have had if I studied this company back in 2019 or 20. And because gross margins weren't falling all that much, more than likely other margins weren't decreasing all that much. This company did experience some good or okay growth in profit. And then this company experienced those boom periods during COVID-19, the testing phase, and the company saw their revenue increase substantially up to $4.8 billion. But the most important thing here is gross margins. Gross margins increased from 32% up to about 44% during that half year where they had the record revenue. So that meant in that particular half year, this company had profit of $828 million. That was not sustainable. And since then, revenue has dropped off, but not as much as you might think. But the thing that has really dropped off is gross margins, falling from 44% back down to pre-COVID levels of 32%. And that is the reason why profit has fallen from 828 million all the way down to 202 million in the last half year. In this particular slide, I'm looking at cash flow from operations and capital expenditure. And there is something interesting here that the company has ramped up their capital expenditure over the past year or so as cash flow from operations have started to plummet because of those, or the companies coming from or out of those tailwinds from COVID-19 testing. So this company had cash flow from operations of $1.2 billion and only capital expenditure of $129 million. So this company was free cash flow positive by about $1.1 billion in just one half year back in 2021. In this last half year, the company had only operating cash flow of $451 million, but they did spend $224 million on capital expenditure, which means the company was only free cash flow positive by about $227 million. So that just shows you how much this company benefited from COVID-19 and how things have gone or reverted back to normal. Because if we go prior to COVID-19, this company had operating cash flow of around about $400 to $500 million. But the one big change is that capital expenditure. So for some reason, this company has ramped up the capital expenditure. I don't know why, but that is one thing I probably want to explore if I was thinking about taking a long-term position in this company. Now, to continue on this theme, that Sonic Healthcare a few years ago was one of those companies that really benefited from COVID-19, and now those benefits have dried away, gone away. So you'll really have to compare how the company is performing to pre-COVID levels. So what they've done in the headlines here is they've broken down their revenue into base business revenue. They've explained the definition of that just near my head right there. And they've also broken it down into COVID revenue. So last year, they had $3.7 billion in base business revenue and $379 million in COVID revenue. And I'm pretty sure in financial year 22, that COVID revenue would have even been higher. Now that COVID revenue has almost completely dried up, but the base business revenue has increased by 15%. So we should be focusing on base business revenue, not total revenue for this company. EBITDA down 20%, and more than likely that is because COVID revenue and the benefits of COVID revenue have dried away as well, particularly those high gross margins. So EBITDA down 20%, profit down 47%, cash flow generated from operations down 42%, and earnings per share down 47%. So just look at those numbers. In isolation, you might think this company is performing pretty badly, but again, you need to read this company's results with a bit of context. Now, they didn't really mention anything in regards to why they've increased their capital expenditure, but maybe I didn't look hard enough. Another thing about Sonic Healthcare you have to understand is this company is quite acquisitive, and they've made quite a few acquisitions over the past few years. In fact, they've made about, I think this is about 7 acquisitions. Yeah, they've gone into Germany. That's why this company's global was stuck in my mind. Yeah, there it is. 3 acquisitions in Germany, 2 in Switzerland, 1 in UK, and 1 in USA. So this company is definitely global, and they spent about $500 million on these acquisitions. So maybe one of the reasons why they've increased their capital expenditure is because of some of these acquisitions. So that's another thing they have to keep in mind in regards to Sonic Healthcare. And that is actually a little bit of a red flag, in my opinion, that this company is so acquisitive. I would prefer more organic growth rather than growth through acquisitions, but they have done it successful in the past. And I don't know if it's going to be successful now, but hopefully it will be, particularly if you're a shareholder of this company. You are hoping that these acquisitions will be beneficial for the company in the long term. Now let's have a look at the chart for Sonic Healthcare. This is a weekly chart going back 10 years to 2014. And this particular chart has all the hallmarks of a high quality company. Well, from 2014 all the way through to 2022, it definitely has. Share price increased from the low bottom left to the top right in 2022. Share price increased from $18 to the high of $47 in the beginning of 2022 or towards the end of 2021. But since that high of $47, the share price has been languishing. And there are reasons behind that. And I've already discussed the reasons behind that. Probably the other thing I should point out is recently the share price fell through a support level at $28.50. But the last 2 days of the trading week, the share price of Sonic Healthcare rebounded quite nicely and finished right on that support or resistance level at $28.54. Now, the share price is still in a weekly downtrend, still under pressure. We don't know if this was just a little bit of a bounce, sort of a dead cat bounce, and that $28.54 is sort of like that resistance level, and the share price will go back down again. But I think this company has the potential to be classified as a high quality company in the future. So you are buying or possibly buying this company at a discount, because if you take the trend of the company's share price in the chart from 2014 through to about 2020, before we realized this company was going to benefit from COVID-19, if you just look at the trend, I think the share price and the valuation of this company is under trend. So if this company can prove to the market that it is going back to a growth phase, I think maybe there is value of this company or in this company right now. The next 5 companies I plan to do in this series include ReadyTech. I'm looking forward to do a video on that company. I have held ReadyTech for a short period, but no longer am a holder. AGL, Clinuvel, Beam Communications, and AVA Risk. And after AVA Risk, I have about 8 or 9 companies to do, and this series will be completed. And that is all I have for this Sonic Healthcare Financial Year 23 result video. If you have any questions on Sonic Healthcare, if you're a sharer of this company, if you think there is good value in this company right now, I'd love to hear your thoughts. So leave your thoughts, your questions in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.